Right, good afternoon, everyone. As we are at the end of another week of trading on Friday, the 2nd of August, we'll have a look across the calendar, see what's gone on. Talk about a couple of things that weren't on the calendar as well. So, Monday, no high impact data. Tuesday, you got these GDP figures out of the eurozone. I mean, some positive, some negative. I mean, the eurozone as a whole was positive. Germany was negative. France did okay. So, but GDP figures are backwards-looking indicators. German inflation slightly higher than consensus. None of that really shook up markets too much. When I went into Wednesday was when the action did actually kick off. So we started with CPI out of Australia. You see here a monthly CPI indicator. I don't know why that's the only one that's high impact in this calendar, but anyway, I'm not the one that chooses that. But you can see this came in line with consensus. Right, inflation rate quarter over quarter came in line with consensus of 1%. Right, inflation year over year in line with consensus. The RBA, the trim mean quarterly figure came in slightly below consensus. Trim mean yearly figure came in slightly below consensus. So markets kind of ran with that and accept the fact that it was kind of slightly lower on the trim mean methods of calculation, but ultimately the Australian dollar sells off the back of that. I mean, inflation is still too high. I mean, 1% quarter over quarter twice so far this year. That's 2% already. That's pretty much their entire year's worth of inflation in the first 2 quarters. So if it continues on at that pace, I don't know why all of a sudden you'd be going and pricing in interest rate cuts. I mean, like the last kind of 3 meetings from the RBA, they've considered hiking interest rates. Inflation still at 1% per quarter. That's historically interest rate hike territory. Again, markets probably getting slightly ahead of themselves, going pricing in cuts at this point in time from the RBA. But again, that's not really my choice who prices in what. But solid downside off the back of the Australian dollar, or on the Australian dollar off the back of that data, and kind of opens up the door for maybe some potential cuts through the year end, even though I completely disagree with markets pricing off the back of it. But anyways, that was that. Chinese manufacturing pretty in line with consensus, so there wasn't too much to see there. And then into an interest rate hike from the Bank of Japan. So it wasn't fully expected, it was pretty much expected, but Bank of Japan hiking interest rates, refusing to give us any sort of clarification as to whether they will continue to hike interest rates. But another step in that direction, another positive for the Japanese yen, and kind of continues its strength over the last, certainly over the month of July, carrying into now August. So, strongest currency across the board in July. A couple of interventions from the bank or from Japan themselves. Couple that with some weak economic data across the US. Closing that gap in bond yields certainly is a positive for the Japanese yen. Bit of downside in stocks also contributes to a bit of safe haven play. So Japanese yen continues to be a buy. Going forward. Brings us into then the Fed. On Wednesday evening, no interest rate cut, that was to be expected. Then we had the press conference, and they still in their statement did kind of suggest that we'd made slightly bit more progress towards inflation. Still more needs to be done in order to give us full confidence to go and cut interest rates. I say the economy is still trucking along at a decent pace, which it is, although economic data has soured substantially over the past 6 or 8 weeks. So that has continued after their statement. So I don't know really. I mean, to look at growth, I suppose the growth figures last week were super positive. So from that respect, still is performing well. But more the forward-looking indicators are struggling, to say the least, at this point in time. Then it comes around to the press conference, and he did open the door up to a cut in September. Right, in the statement said more progress needs to be seen in inflation, but in the press conference did open up the door to an interest rate cut. And then markets go full steam ahead, pricing in cuts at every meeting through the rest of the year. So where that gets to by the end of the year is unsure, but the fact that they've opened the door up to it, they're kind of allowing markets to price in interest rate cuts, or to finish pricing in interest rate cuts for September. The question that markets ask themselves is how much we actually go and get. I mean, he did say there's a couple of circumstances he could think of that would result in multiple cuts through to year end, or maybe even not at all. So what scenarios he's got in his head, I'm not so sure, because the only way I can see it going is cuts at the moment due to the economic data, which brings us on to the manufacturing PMI on Thursday, which was super negative. Previous one got below 50 down to 48.5 when it was expected to be above 50. This one was expected to tick up slightly to 48.8, actually comes in 46.8, and then they again kind of fuels a bit of recessionary fears, which is obviously not a good thing. Stocks got hammered in yesterday's trade, and that has continued on into today's trade with non-farm payrolls, and that's just super negative across the board. Only 114,000 jobs added over the month of July. Couple that with a downward revision to the previous month, so 206 down to 179, so doubly negative when it comes to the actual NFP print. Unemployment ticks up 0.2% up to 4.3%, so again super negative in that respect. You have a look at average hourly earnings month over month, below consensus, year over year below consensus, and that is just a clean sweep of negative numbers. It's not so often you get that one way or the other on NFP where they're either all positive or they're all negative. This case it's obviously all negative, and bad news is bad news at the moment. You couple that with lackluster earnings, certainly no stellar earnings, not too bad, but certainly not the sort of returns company have had over the last number of earnings reports. So lackluster earnings, bad economic data, the Fed opening the door up to an interest rate cut in September, and now markets off the back of this NFP have maybe lost the run of themselves a little bit, and going in and pricing in 2 interest rate cuts for September, or a 50% or a 50 basis point cut in September, which, yeah, I'm not sure that really makes too much sense. Inflation is still up in the upper band of 2%, 3% and stuff. It's still too high. It's too high to go and whack it lower by 0.5%, but it's what the markets did back end of last year. The Fed said they were going to cut interest rates 3 times this year. The market's like, okay, great, 3, we'll go and price in 7, and they've had to price that out. So, markets are kind of pricing for interest rate, and then markets like to get ahead of themselves. The second they hear interest rate cuts, they just want to blast them lower. So, I don't know, if you look at market pricing, it's kind of looking at 50 basis points in September, 25 in November, 25 in December at this point in time. I'm not so sure that happens, but yeah, I'm not so sure that happens, but yeah, we'll have to see, I suppose, how that pans out. So we'll keep an eye on market pricing in the coming days and weeks ahead until we get into September. The Bank of England, though, cut interest rates as well, 5.25% down to 5%. Now, cable was the markets were undecided as to whether you will or will not get a cut on Thursday or yesterday at this point in time. Consensus 5 out of 9 in terms of a vote for a cut, vote for it to be unchanged 4 out of 9, so it was a bit of a 50-50 decision. But I don't know whether other people know something that we don't, and I have to imagine people who work in the institutions and stuff probably have a bit of information that us retail traders do not have. And cable was off 100 pips in the lead up to it yesterday morning, so cable got whacked before it, and by the time you actually got this out, it had a bit of a knee-jerk spike, kind of 30 pips lower, and kind of turn around a bit after. Along with the interest rate cut, right, they did in fact go and cut interest rates. People voting for a cut and people voting for unchanged remained exactly what the consensus said, but ultimately they said that inflation is still a problem. They're expecting inflation will push higher through to year end, and they're still worried about how that then affects medium term inflation. And the people that voted for a cut, the 5 people that voted for a cut, didn't exactly vote with 100% confidence. Some of them were 50-50, completely undecided as to whether they should cut or whether they should vote for it to be unchanged. Ultimately you got 5 members that ended up voting for a cut, but I can't see a string of interest rate cuts from the Bank of England through to year end, which is probably a positive when you think about it between now and the end of 2024. So that's really it for the week. You got services PMI on Monday out of the US, and at this point in time, bad news is bad news. You can have a look at the currency. Currency's a little bit of a tricky one at this point in time. I mean, dollar Swiss getting whacked, dollar yen getting whacked, but ultimately your Aussie Kiwi bit all over the place. Bit of upside on the dollar to start the week, then a bit of downside in the dollar, then it's chopped sideways. Same thing in the Aussie. Euro dollar kind of weakened for the majority of the week, and now it's just blasting higher off the back of NFP. Cable, the exact same thing. So, dollar kind of toing and froing with a bit of kind of safe haven appeal mixed in with some weakness. Dollar Swiss just getting whacked, as I said. Dollar yen getting whacked. Really, the pain has been in equity markets and bond, well, not bonds themselves, bond yields, but you can see Wednesday had a bit of upside on the S&P 500 for whatever reason, but you then got the manufacturing PMI yesterday, and the S&P got whacked, and now you get NFP strong, and it's not got whacked off the back of NFP, but it's a pretty decent move on the 5-minute time frame. Has kind of pulled back, so it'll be interesting to see how that pans out into the close of play today. But stock indexes firmly pointed to the downside across the board. They tried to bounce higher earlier on this week, didn't materialize, been sold back into, and the trend at this point in time is pretty clear on the stock indexes across the board. But bond yields, I say through the roof normally, but through the floor. Right, 2-year yield still above the 10-year yield. I wonder, does that normalise sometime soon, and does the 2-year yield get back below the 10-year yield? So these getting whacked, obviously effectively interest rates. You guys know how this works, and they lower interest rates being cut. So ultimately that has to be factored in. Plus a bit of safe haven appeal from bonds, with stocks pushing to the downside. So these being lower is a negative for the dollar. Oil, also an interesting one. There's tensions are across the Middle East. Leader of Hamas, leader of Hezbollah, being killed over the course of this week. Lebanon being attacked now. Iran looking to retaliate against Israel. I was just listening on Bloomsbury like 5 minutes ago, saying that there was sirens gone off somewhere in Israel that is a relatively quiet area of Israel. So maybe that's some retaliation gone through there. I mean, it may or may not be. We don't know. I haven't had any clarification from it, but there definitely will be some retaliation. Maybe we get it over the weekend. So upside on oil off the back of that. Then you come into kind of weak manufacturing yesterday, weak jobs today, and it's just been oil's just been whacked over the last 2 days. But it was through the roof the day or two before that. So oil a bit choppy, but ultimately the trend is still there. Didn't manage to gain that much upside, as it is kind of confined to those countries and doesn't really affect kind of global oil production really when you think about it. But anyways, as I said, services PMI next week. We'll cross that bridge when it comes to it. We'll have a week ahead video on Monday, but action-packed week. The Fed opening the door to interest rate cuts in September. The Bank of England cutting interest rates, joining the Swiss National Bank, the Bank of Canada, and the ECB in the G8 currencies. Weak manufacturing PMI kind of stokes more kind of recession fears in the US. Stock index is down off the back of it. Slightly lackluster earnings from the US, and then that's compounded by a weak NFP to end the week. But pretty action-packed week. Bunch of stuff going on. Hope it went well for you, and we will see you next week for another week of trading.